Good morning, everyone. Today's date is 3/23, and it just now hit 12 o'clock p.m. Pacific Standard Time. So, good afternoon to all of the MMTs, to all of our traders around the world in every country that we have. Is that we're going to update you on the NASDAQ composite on the monthly chart. We've come a very, very long ways. Back in my heyday when I was shorting up here, we were at 5,000 on the NASDAQ composite. It's taken roughly almost 13 years to work that multiple off, and we can see that we've had some great rallies off of the bottoms up until 2007. It was about a 4-year expansion in the NASDAQ composite when we hit those bottoms from that bubble. When I go back and look at the 1997 breakout, we had tested that during that financial crisis. However, the bull run started in '09 when we called these bottoms back then. And we've gone straight up here on a monthly level, and we're getting overbought. And we've hit a major, major resistance on a monthly chart. Now, this is a monthly chart, and let's take a look at it together. Right here. Here's where we're at. The 3,500 level, I've always talked about it over the years that well, first of all, here's a monthly trend line. We're going to have to get above 33.28. This is the true neckline right at about 3,500 on a monthly level. However, we're overbought. Let's go back to 2012. In 2012, we went parabolically up for 90 days like we are now. And then we called for a nice little correction, and we got it. We came back and started where the calendar year started in 2012 at that support level. We rallied up. Then we had that nice big pullback that we talked about to the 2,800 level in the NASDAQ composite. And we've gone up and we've made another higher high than where these higher highs are. And that bull is on fire. I can tell you that from a monthly reading that each level that we go up, we're going to have another correction. Correction in 2012, we had 2 of them in the calendar year. We called each one of them perfectly, right at those highs. What I am telling people now that this bull has got a lot more power behind it. And the FOMC has been very accommodative to Wall Street, and that the amount of stimuluses that the Fed has put in, which has got the housing market to turn up, we've got lots of economic indicators that have improved, but you got to remember one thing, that when the stimuluses that were a backstop from the Federal Reserve start to wind down and come down, that's where we're going to get the more volatility moving forward in this year. They will have to eventually pull back their stimuluses. And when we do pull back, we're going into a major earnings. We will buy the dip. And we've got the 10-month moving average at 30.61. That's the blue line. That's the monthly moving average. But let's talk about the ranges that we started on 11/1 in November. Back here, that's where that major support level was, and this is where the rally started. We're 5 months into it. It doesn't just start right here, it started here. And it started at a great monthly support level right here at the 20-month moving average, and we haven't looked back. We had a lot of austerity around the world kicking in. Right now you have Cyprus and lots of things in Europe that are a problem. The Chinese markets are not firing all cylinders. The Japanese market is doing good, and in various sectors, and our economy is doing well, but we're short-term overbought. That means that each little move that we go up higher, there's going to have to be a correction. Where do these corrections normally happen? They happen during the upcoming earnings season that starts in April. Today is the 23rd. When we start getting into the quarterly reports like FedEx and Oracle missing big, Nike did extremely well, but they've gone down 8 quarters in a row, and they finally got their act together, and Nike went up. So, what I will tell you in the NASDAQ composite, there's lots of high beta stocks. They're going to have to deliver, meaning that we could have a little bit slower growth, but toward the third and fourth quarter of the year of 2013, and everything keeps going as good as the economic indicators say, and if the monthly jobs report here at the end of the month is better. We've only had a couple of months improvement in that jobs report. We have a lot more work to do. But the Fed has been very accommodative, and that has brought the bull and the institutions off of the sideline. There are a lot of people on the sideline that will be waiting to buy the dip, and it'll be a stock picker's market during that earnings season. I am just putting out a high alert that we are in another overbought market on the NASDAQ composite, and that the bull is very strong compared to any other time in its new run. I mean, there were lots of bull runs that we had, but they gave them all back up. But when we start at back in 2011, we bought these dips. We made the higher highs in 2012. We came back here and tested these lows in 2012. And then we had another nice 1 month at the high. We had a nice little correction down here. And then we've had the bull that started in November, where we like to rally November, December, January, February, and March. We start getting into April, though, like we did last year. Here's the April reversal. It was a nice pullback. We called that top. We're telling you now that we're going to have another pullback, 5 to 8%. During the summer, could even get as much as 10%. The individual equities that have good earnings growth, their earnings multiple have done well since we started this bull. However, we're overbought and we're going to have a pullback. Each level that we go up and make another high, it's going to be that more overbought. And during the earnings season that's coming upon us, there's going to be lots of volatility. There's going to be great dips to buy in equities. There's going to be a lot of money on the sideline that's going to return to U.S. equities. They've got them up here. That money can't make money if it's on the sideline. The treasuries are going to pop. The bond bubble. There's lots of things that I'm not going to go into this video about, but it will affect the market and give the market a reason to pull back. So the money on the sideline can buy the dips in the NASDAQ composite. And this is a monthly chart. So we're very, very excited about the upcoming earnings and about where these pullbacks would give us a great opportunity to lock and load individual positions that are leadership in the key sectors and indices within the NASDAQ component chain. And what I am telling everyone, we're up here at a major 3-month breakout. It's going to get exhausted as it is, and there's going to be a pullback. Don't worry about being fearful of the pullback this time around. The mentality of that bull is going to buy those dips. So individual leadership equities like Google, like Priceline, all the big ones that make money and do well, when they have their dips, we're going to want to go in and buy them. But I can tell you that the broader NASDAQ 100 leadership stocks are all overbought. And they have to pull back. They always do, they always will, and they always have. And that's where we want to come in, MMTs, and buy those dips and sell back into the next bull rip. We are out of bear territory. We're in bull territory now. It's not the same as it was before. That's why the dips are going to be strong for the bull. So the bull is totally in control. It certainly is not the bear. Okay? And we don't see that bear getting control of the market based on the kind of moves that we've had here, unless something was to derail in the U.S. economy. But look, they've got everything to turn. They got the financials. You got to have financials. You got to have the transports. You have to have the housing sector. You have to have all of those working to create a new bull. And we've said that for multiple years in here. And we're finally now in that level. Buy the dips, sell the rips, do your homework, Understand that you don't chase markets at the highs, and we'll pick them off during the earnings season one by one. NASDAQ Composite monthly level 90-day trend. Bull is strong.